When you are facing an unexpected financial emergency, an urgent car repair, or a sudden bill that cannot wait until payday, applying for a short-term loan can feel like your only option. If your traditional credit score is less than stellar, apps like Possible Finance offer a beacon of hope because they do not rely on a standard FICO credit score check to make a lending decision. However, the fear of hitting the submit button only to receive an instant automated denial can be overwhelming. Many people assume that because there is no FICO check, approval is virtually guaranteed, only to be caught off guard when their application is turned down. Understanding why denials happen and how the system actually evaluates your financial profile is the key to turning an uncertain application into a successful approval. So how does Possible Finance actually decide who gets approved, and what specific steps can you take right now to maximize your approval odds? Unlike traditional banks that look at past credit bureau reports, Possible Finance uses automated underwriting technology that connects directly to your checking account to evaluate your real-time cash flow, spending habits, and income consistency. When you link your bank account using Plaid, the algorithm scans your recent transaction history to determine if lending to you presents an acceptable risk. Because an automated algorithm is doing the heavy lifting, your banking activity must tell a clear, stable, and convincing financial story. The first and most critical action you must take is linking the correct primary checking account. Possible Finance requires proof of regular income deposits, typically requiring a minimum monthly income of at least $750. A common mistake borrowers make is linking a secondary checking account, a prepaid card account, or a newly opened bank account that lacks a paper trail. To maximize your chances, link the primary checking account where your main paychecks or steady income streams are directly deposited. Ideally, this account should have at least 2 to 3 months of consistent transaction history. If you recently switched banks, waiting until you have received multiple direct deposits into the new account before applying will drastically reduce your risk of an instant rejection. The second factor the underwriting algorithm scrutinizes is your account balance, health, and overdraft history. The algorithm looks closely at your average daily balance, as well as any non-sufficient funds fees or return check charges. If your checking account frequently dips into negative numbers or triggers frequent overdraft charges right before you apply, the system flags your account as high risk, assuming you do not have the cash flow capacity to handle installment repayments. To position your application for success, spend a few weeks maintaining a positive ending balance each day. Avoid letting your balance hover near zero, and eliminate unnecessary, non-sufficient funds charges. Demonstrating that cash remains in your account even after daily expenses are paid signals to the algorithm that you have room in your budget for loan repayments. The third crucial strategy involves timing your application strategically. The exact moment you submit your application can significantly impact the algorithm's decision. Applying when your bank account is at its monthly low point, such as the day before payday when your balance is nearly drained, increases the likelihood of denial. Instead, time your application immediately after a direct deposit or paycheck hits your account. When your balance is temporarily at its peak and recent income is clearly visible at the top of your transaction feed, your cash flow metrics look infinitely stronger to the automated system. Additionally, verify that no large automated bill debits are scheduled to pull from your account on the exact day you apply. Another often overlooked pitfall is debt stacking across multiple cash advance apps. Possible Finance's system can see recurring debits going to other short-term lending or paycheck advance platforms such as Earnin, Bridget, MoneyLion, or Dave. If the algorithm detects multiple active cash advances coming out of your checking account simultaneously, it perceives that you are over-leveraged and struggling to cover existing obligations. Before applying for a possible loan, try to pay off or pause other short-term advance tools to clean up your transaction ledger. Showing a clean slate with fewer competing debt obligations makes your application vastly more appealing. Finally, keep in mind that building a relationship with Possible Finance is a progressive journey. If you are approved for a smaller initial amount than you hoped for, accept it and focus on flawless execution. Possible Finance allows you to repay loans in flexible installments and reports your payment history to major credit bureaus. Making every installment payment on time establishes an internal positive track record with the app. As your reliable repayment history grows, Possible Finance routinely increases your maximum borrowing limit on subsequent loan requests up to $500. By ensuring your linked bank account displays stable direct deposits, a positive daily balance, minimal overdrafts, and timed cash flow, you put yourself in the absolute best position to secure an instant approval and get the emergency funds you need.